Okay, dear students, first of all, welcome for our live revision class. And in today's class, the objective is we will be revising relevant topics, but through questions. And before attempting the question, I will give you a quick revision of only, I would say, those areas which are examined in that particular question. Plus one more thing from here onwards, but I'll be doing it, inshallah. All the Kaplan kit question which we'll be doing, either online or offline, but whenever that particular question will be uploaded on the portal, within the caption I will highlight the topics as well, so that before even attempting that question you should know that what are the topics which are examined in that particular question. So that might help you. So that I'm going to do, inshallah. Okay, in today's class, let me first give you the revision of a topic which was examined in that question, and make sure every one of you should be having these focus notes. Whoever does not have these notes, just even in your WhatsApp group, ask admin, they will help you. Because plus, if there is any query relating to the portal, ask admin, they will help you. I can help you where you are having any problems in understanding the questions, understanding the topics. But if you ask me something is XYZ relating to the portal, so I have no idea at all. That is not my area of, I would say, expertise. So employment income, employment income, employment income. It will take little time. Okay. I hope everyone can see this. Approved and unapproved share option scheme. Kindly keep replying so that when the recording will be uploaded, other student can get the equal benefit. Now listen, in employment benefit students, one topic which is extremely important is approved and unapproved share option scheme. First of all, you should know what are the tax consequences of approved and unapproved share option scheme. If the share option scheme is approved, okay, then on grant date you will be paying no tax. On exercise date you will be paying no tax, except there is a possibility that in case of enterprise management incentive plan, on exercise date taxable benefit could arise, and it is only possible when enterprise management scheme share option scheme is given to the employee at a discount. Discount means if exercise price is lower than the market value on grant date, then on disposal date there will be capital gain. Now let's talk about unapproved. If the share option scheme is unapproved, means whatever XYZ conditions of HMRC has given the conditions of approved share option scheme, if they are not met, so the scheme is unapproved. Again, on grant date there is no tax, but on exercise date, yes, there will be employment benefit. On that employment benefit, employee will have to pay income tax. If the shares they belong to a quoted company, then employee is required to pay class 1 employee and employer will pay class 1 NIC. But if the shares they are coming unquoted from unquoted company, then only class 1 A NIC is paid. Then finally there will be a capital gain also on disposal date, that is sales proceed minus market value on exercise date. Now let's particularly discuss. Can you see this, student? Look at this CSOP, EMI and SAY. Company share option plan. Participants. Look at the first point. Employer chooses. Just focus on that, employer chooses. Now listen. If my company wants to give CSOP, okay, and the company says we will decide whom we should provide this scheme, and they're thinking for CSOP. So this point, when the company says we will decide to whom we should provide this scheme, then this condition is acceptable. Because under CSOP, employer chooses. This scheme is not for everyone. Okay. So for CSOP, this point, this condition is 100% valid. And the same thing is valid for EMI also. Then look at the, I'm just comparing CSOP right now and little bit EMI. Maximum value. Look at this, maximum value is £60,000 per employee. It means that any share option scheme under CSOP having value less than £60,000 or equal to £60,000 per employee is 100% acceptable. That condition is acceptable. That condition will be treated as this as CSOP scheme is an approved share option scheme. But if you are providing share option scheme under CSOP and having a value more than 60,000 per employee, then your entire scheme becomes unapproved. Next point, look at the exercise period of CSOP. Exercise period is 3 to 10. It means your employees, they should be exercising the CSOP share option schemes after 3 years. Then between 3 to 10 they can exercise at any time. Issue price is equal to market value means issue price should be equal to market value on grant date. It means that if the issue price on grant date is not equal to the market value, if it is less than the market value, means if you are providing CSOP but you are keeping exercise price lower than the grant date fair value, means you are providing CSOP share options scheme at a discount, then the entire scheme becomes unapproved. But this is not the case in case of EMI. If you are providing discount in case of EMI, then only the discount amount becomes your taxable income on exercise date, but the scheme does not become unapproved. Base cost of the shares for the CGT, price paid means the exercise price which of course employee has paid. But in case of EMI, it is price paid plus the discount if company has given any discount. Make sure you should not be holding more than 30% in case of CSOP. But a student, this is in our handout, page number 23. I think I have mentioned in my regular classes also, wherever the conditions, any topic which discuss the conditions, students, first you need to understand those conditions and after that you have to memorize them as well. If you don't memorize, then obviously you won't be able to answer. You will not be able to answer the question simply. Okay. Now look at this SIP plan, share incentive plan. Participation, it says all employee. Now stop. If you are saying participants, all employees. Now listen, if your company says we want to provide SIP and we will choose employees, so student comment, will that argument or will that condition be acceptable under SIP? If employer says I will choose whom should I provide SIP, will it be acceptable? Yes or no? Kindly reply. Students, I'm waiting. Notes are in front of you. You can see that. Is it possible that SIP scheme I'm giving to Mr. Y, he's one of my employees and there are other also, and let's say I'm giving to some of the employees and remaining I'm not providing. Will it be acceptable? Students, am I audible to you? So I can't see anything in the chat box except the empty chat box. Let me check. Any answer from the students? There is no answer. Wow. So let me repeat the question. SIP plan says this should be for all the employees. If you are solving a question, okay, and the employer says we will choose the employees, to whom should we provide SIP? So under SIP plan, is that condition acceptable or it is not acceptable? Let's see. The answer is not acceptable. Thank you very much. It's obviously not acceptable at all. You have to provide SIP plan to all if you want your SIP plan to be an approved share option scheme. Okay. Number one. Number two, look at the amount. Per year, maximum value of tax-free shares, free shares should be 3,600 per year. It is per year per employee. Means if you are providing SIP scheme to your employee and the value is more than 3,600, then a scheme becomes unapproved. Then under SIP plan, we provide a choice to the employee that you can buy partnership share, but how much employee can spend on partnership share? That is lower of 1,800 and 10% of salary. Why would an employee is going to buy the partnership share? There's a reason. What are the incentives in partnership shares? You can see that, students. Avoided matching shares. If an employee buys partnership shares, let's say for 1,800 pound, so he will be getting additional 3,600 pound shares. Against each partnership shares, he will be getting two partnership shares. Dividends tax free. From SIP plan, if you're getting dividend and that dividend you are investing more to buy SIP shares, then your dividend becomes exempt. Holding period is important, student. Holding period is going to be 5 years to get the full benefit. Base cost of the share will be market value when you remove from the plan. One more thing regarding SIP, I just want to highlight. Let's try to find out, is there any condition which can support the employer if even it is a SIP plan and employer says, I want to choose employees according to me, whatever, whom I want, I should give SIP plan. Student, can you see anything regarding that? There should be something which supports this view of employer. Yes. Student, can you see conditions for SIP? The plan must be available to all employees of the company or a group company. However, there is something which supports employer. However, employees with less than 18 months of service can be excluded. There's only one option available. If employer says, I want to choose employees, okay, then you can exclude those employees. They are having employment period. So far, their employment period, time period is less than 18 months. Is that clear? The plan must have no arrangement for loans to employees for tax free. So only there's one point which can support the employer if employer wants to choose employees in SIP plan. So we'll say, okay, you have one option, and that option is you can exclude those employees if they're so far, whatever time period they have spent in your company as an employee, if it is less than 18 months. Or put it another way around, you can say that only those employees under SIP can be selected. They have at least the minimum, they have at least spent minimum 18 months within the company. Okay, student, just give me 1 minute only, please. Okay, sure. This is another area which they have asked in the question, which we'll be discussing shortly. Can you see the heading 6.1 Principal Private Residence Relief? Simply, if individual is selling his or her principal private residence, if two things are equal, excuse me, one is occupation period and another is ownership period. If both are equal, means your occupation is equal to ownership, in that case, entire capital gain becomes exempt. Repeat, you will get principal private residence, but if you want the entire gain to be exempted, entire gain, it is only possible when your occupation period should be equal to ownership period. Of course, the calculation of ownership period is very simple. The day you have bought a property, the day you have sold, the difference is your ownership period. The main thing is occupation period, and within the occupation period, student, if you recall, there are two types of occupations. One is actual occupation, means XYZ owner lives in that property, and the second is deemed occupation. So things become a little bit, I would say, more interesting when we go for deemed occupation. So actual occupation is very simple. Obviously, when owner is living in that property, whatever duration that owner has spent in that property, it is an actual occupation. Now let's talk about the deemed occupation. Everyone should focus on deemed occupation. Here, periods of Okay. Periods of deemed occupation. A says last 9 months of the ownership. Student, last 9 months of the ownerships are always considered as deemed occupation, irrespective of any condition. No need to meet any condition. Last 9 months of the ownership, they are always a part of deemed occupation. Then look at the B part. Up to 3 years of absence due to any reason. Up to 3 years of absence due to any reason. That could be someone, Mr. Y has left the home and let's say he wanted to travel the entire world and he's coming back to home after 2 years. According to the deemed occupation rule, we will consider that he was at home. So up to 3 years of absence. Then look at the point number C. It says any period spent working abroad. And the D says up to 4 years of absence while working in UK. Means you are in UK. You are in UK. You are working in UK. But there's a possibility that your employment place is so far from your home that it is extremely difficult for you to go to the work and come back home. So while someone is working in UK and he's absent from home for 4 years, so that time period is also considered as deemed occupation. Another point is from point B to D only applies if at some time both before and after the period of absence there is a period of actual occupation. For example, first Mr. Y was actually living in that accommodation, then he leaves the accommodation and then he reoccupies the accommodation. If this is happening, only then we will consider point from point B till D. But there is one exception when it comes to C and D. If look at the point number C and D, it says if prevented by terms of his employment. For example, Mr. Y really wanted to reoccupy his home, but the nature of the work was such that employer did not give him a permission at all. The question is, sir, how it is possible? If we are an employee and we really want to reoccupy our home, we really want to go back to our home. But the question is, there's a possibility of the nature of job is such that employer says you cannot go back to your home. You cannot reoccupy your home. There's a possibility. Mr. Y is a great scientist and he's working within UK but far from home, and he's working for the government, and government before joining the job has already informed Mr. Y that once you are here, then you will be here, let's say, around for next 10 to 12 years. But for us, the main point is if this context within the scenario examiner says that it was impossible for XYZ employee to reoccupy the home because of the terms and conditions, or employer was not giving permission, so it's okay. We will consider that time period also in deemed occupation. Otherwise, from point B to D, they are only applicable when they are preceded and followed by actual occupation. Now, another very important concept, there's a possibility that within the main residence there's a business use as well. If your examiner says Mr. Y is having a property which has, let's say, 4 rooms, and then examiner says out of 4 rooms, 1 room was always used for the business, it means whatever the capital gain comes, maximum principal residence relief could be available, which is 75%. Because 25% of the property was not your main residence, it was not used for residence purposes. 25% of the property in my example, it was always for the business. And this is principal private residence relief is available on your residency when you are selling it. It's not available on your business place when you are selling it. But again, if there is any business portion within that accommodation, examiner is going to highlight that. And the rule says where part of the residence is used for business purposes throughout the period of relief, is not available on gain related to that part. Now, finally, there's a possibility of a letting relief also. But the important thing is, Letting relief is whatever is the rule for the letting relief, but first you need to know one thing. Letting relief rule can only be applied when one portion of the property was given on rent, another portion is retained by the owner. Only then letting relief will apply. Otherwise, letting relief will not apply. For example, owner does not live in the accommodation and owner has given the accommodation on rent. So then in that case, you will not be getting a letting relief. So letting relief is available to cover any gain that not covered by principal private residence if owner is absent, not covered by the democcupation rule, and property is rented out or a part of the property is rented out, the remaining part being occupied by the taxpayer. Look at this, the remaining part is occupied by the taxpayer. Letting relief is the lower of. Actually, letting relief is the lowest of three. One is equal to the principal private residence relief amount. Second, you can say £40,000, and the last one is very important, gain related to letting period. We'll take total period multiply by letting period, but you should know one thing. Any period which is already covered as occupation period, either actual or deemed, cannot be a part of letting period. Another example could be, assuming if your examiner says that accommodation was given on rent for 5 years. Second examiner says 60% of the occupation was occupied, 60% of the residence was occupied by the owner, and the 40% of the property was actually given to XYZ person on rent. In that case, the question categorically mentions the property was on rent for 5 years. But after that, examiner has given you the portion that 60% retained by the owner, 40% was retained by the tenant. In that case, logically, the letting period will be 40% of 5 years, which will be 2 years. So this is how we calculate actually letting period. So there is a possibility, student, that in the same question you are having principal private residence relief as well as letting relief. But one more thing, students. Look at this deem occupation rules from point B to D. They are only applicable if if simply it is preceded and followed by actual occupation. Now try to understand the scenario. Let's assume Mr. Y has bought the accommodation step 1 and did not occupy the accommodation, for example, the first 12 months of his ownership. Repeat, there's a possibility that Mr. Y is somewhere away from the area where he bought the accommodation, or maybe Mr. Y is in abroad. But try to understand. Step 1, Mr. Y buys the accommodation, but Mr. Y does not occupy the accommodation for first 12 months. After that, let's say assuming he comes back to UK and start living in that accommodation. A very important point. If you have bought the accommodation and you did not reoccupy first 12 months, so entire 12 months cannot be treated as period of occupation. Now here, even the deem occupation cannot apply. How we can apply the deem occupation? Because it is not preceded and followed by actual occupation. So you have to read the scenario properly, because deem occupation rules are only applicable other than part A, point A, that when your deem occupation period is preceded and followed by actual occupation. So it means if someone buys the accommodation and does not occupy that accommodation, does not live in that accommodation for first, let's say, 12 months or 2 years of the ownership, then that period can never be a part of deem occupation. Now, one more concept, then we'll be practicing a question. A little idea about IST, inheritance tax. Okay. Simply relating to inheritance tax, I just give you a little idea. Inheritance tax, the IST is on gift. Okay. Simply, when one individual gives gift to another individual, when one individual gives gift to another individual, it is considered as PAT, potentially exempt transfer. When one individual gives gift to another individual, it is considered as PAT. Let's go to the OneNote and then I'll we'll discuss a little bit IST. Just a minute. I was expecting more students in today's class, but maybe students are busier than what I thought. Just a minute. Nowadays, students are more busy. Just a minute. Okay, I was just giving you the idea about IST, a little idea. Assuming Mr. Y gives gift to Mr. Z. The first point is under IST, when one individual gives gift to another individual, it is considered as PAT. Potentially exempt transfer. Okay. Assuming father has given gift to his son. So under IST, it is PAT, potentially exempt transfer. Second point, assuming Mr. Y, who is the father of Mr. Z, has given a house as gift to Mr. Z. So first thing which you will be explaining to your examiner after reading the scenario, you will say gift from one individual to another individual is PAT, potentially exempt transfer. Okay, fine. Till here, it's everything is okay. After that, your examiner says that after actually giving that as house as gift to his son, father still lives in that house. Try to understand. Father has given a gift to his son, but after giving a gift, still father lives in that house. Then, students, you will say it is actually a gift with reservation. When you are providing an asset as gift and still technically you are having a control on that asset, what kind of gift is this? Then the name is gift with reservation. Okay, fine. Assuming initially the house was given as gift on the date was, I'm just writing a date, 1/1/2026, which falls in the tax year 25/26. So you first step, you will explain to your examiner that gift from Mr. Y to Z is a PAT. Then you will say that after giving the gift, still Mr. Z lives in that accommodation. It is gift with a reservation. Then story continues, and then examiner says after maybe 1 year, 2 year, father left that house, okay, and then father starts living with his brother. Now listen, if this is the case, we'll say that logically it is PAT on 1/1/2026. Then let's say the reservation was uplifted on, I'm just giving an example, putting a date, 31st December 2028, which falls in the tax year 27/28. Reservation was uplifted because on December 2028, it actually falls 27, it should be 28/29. 28/29. Okay. Reservation was uplifted on 2028/20 during the tax year 28/29. When the reservation was uplifted, again it will be considered as PAT. Obviously, the value of the house on 1/1/2026 will be different as compared to the value of the house on December 2028. Now, listen to me carefully. What is the next explanation? Technically, first the PAT arises on 1/1/2006 when the reservation was uplifted. Again, it is a PAT on in the tax year 28/29, and obviously the value is going to be different on in the tax year 28/29 as compared to 25/26. Then you will explain to the examiner that obviously one asset should not be counted as twice pat. In that way, obviously, IHT is going to be very high. Then how to deal with that? The answer is it is up to HMRC to treat the PAT on any one of the dates, and logically HMRC will consider the PAT on that date, which will actually result in higher IHT. Obviously, on the death of donor, this PAT becomes chargeable, provided that the donor dies within 7 years of PAT. Because if donor survives for 7 years after PAT, then the PAT becomes fully exempt. So let me repeat. If donor gives gift to the donee but still uses that asset, it is considered as gift with reservation. So in my example, you will be saying it is a PAT on 1/1/2026, but it is gift with reservation. But when that reservation was uplifted again on that day, it is considered as PAT. So logically, there will be on two different dates, there will be two PATs relating to the same asset. So in normally, there will be, we cannot charge the house IST twice. So what HMRC is going to do, it is up to HMRC to treat PAT in any one of the dates, and HMRC will consider the PAT on that date, which will actually result in more IST. And normally in case of house, I would say the later date, which is tax year 28, 29, should normally it is considered as a PAT date. Why? Because normally we assume that market value of the property keeps increasing. So it means on second, if we consider PAT on the second date, there are more chances that it will actually result in more IST if the donor dies within 7 years. And let me tell you one thing: if we are considering the PAT was made on this second date, that from this date onwards we will count 7 years. If I'm saying no, on 1/1/2026 should be considered a date of PAT, then from 1/1/2026 onwards we'll count the 7 years. So that is what you need to discuss regarding gift with a reservation. So I hope students now you have a, no, I'm not saying 100% idea about gift with reservation, but a little bit idea you should be having about what is the meaning of when one individual gives gift to another individual, what happens, and is plus what is the meaning of gift with reservation. Now let's discuss this question. How many topics we have quickly seen? CSOP, if I'm not wrong, SIP, Principal Private Residence Relief Rules, and IST. It's a 25 marks question. Explain whether one, a company share option scheme CSOP, and two, a share incentive plan SIP will satisfy Yacon Limited's criteria for a tax advantage share incentive scheme. Tax advantage means approved share option scheme. And income tax implications, consequences for the employee of acquiring the shares in each case. How many marks? 8. Read it again, students. Requirement. Explain whether one, company share option scheme CSOP. Second, a share incentive plan will satisfy Yacon's limited criteria for a tax and means approved share option. Approve schemes. Now listen to me carefully. Students, nobody can answer this part A unless that student, after understanding all the conditions of CSOP and SIP, remembers them. Without remembering those conditions, how can you say XYZ condition mentioned in the question is according to CSOP it is correct or it is incorrect? I don't think so that just by reading the context you can directly answer. The main thing is once you have understood the condition, you have to memorize it. Otherwise, you will not be able to answer at all. This is part A. Then look at the part B. It says calculate with brief explanation the private residence relief and letting relief which are available to reduce the chargeable gain on Yacon's sale of his house. Calculate. Again, I cannot calculate principal private residence relief unless I don't know what are the rules for counting occupation period. Plus, if I don't know that letting relief is the lowest of three values, one is principal amount of principal private residence relief, another is, let's say, 40,000 pound, and third one is amount calculated according to the letting period. If I am not able to recall that rule, no matter how sharp you are as a student, no matter whatever you have done in the part 2, or maybe you have done in the rest of the optional paper, that does not matter. If you are unable to recall the relevant rule at relevant place at relevant time, then obviously it becomes very tough, very difficult to answer. That is why before attempting the question, I just gave you a quick overview, just to make one point very clear. If you can memorize these rules, then obviously it cannot then automatically application becomes very easier. Only application cannot help you. You cannot go for application unless you don't know the knowledge of the rules. See, explain inheritance tax implication of Jack Ma's gift of apartment to Yacon on 5th June 2024 if Jack Ma were to die on this date. 5 marks. They are also saying professional marks demonstrated for skills in analysis and evaluation. I think I did mention, if not, I'm mentioning right now. How to get the marks for analysis and evaluation? Actually, analysis and evaluation means you should know the data very well. Student, if you are able to identify the relevant rule at relevant place, you will be automatically getting marks for analysis and evaluation. Means the way you are solving the question, it should look like that, yes, this student knows that he is dealing with which XYZ topic. If the way you are solving it does not show, it does not demonstrate that if you're solving and you have yourself no idea either it is CSOP conditions are met or not, so you will not be getting any marks for, I would say, analysis and evaluation. Then they are asking commercial acumen. Commercial acumen. Now listen, you when number one, when you will be solving the question correctly, you will be automatically getting marks for the commercial acumen. Otherwise, let me tell you, any area where you can demonstrate your skill, like one example, I'm solving a question assuming which that question is having trading losses, and I can utilize those trading losses in two different ways. But out of those two different ways, one of the ways is going to result in higher tax saving. So obviously I'm going to choose that one. So it means it shows commercial acumen. Another, right now we were discussing gift with reservation. So when I'll be saying that there will be two pad on two different dates, then HMRC will actually decide which one is going to result in higher IST. That date should be considered the date of pad. Again, I'm talking about commercial acumen. If you ask me, for getting these professional marks, you're not supposed to put any heading separately. You're not supposed to do anything additional. As far as your answer is correct, believe me, you will be automatically getting these professional marks. But of course, when you are unable to answer the question, then you will not be actually getting the technical marks, and you will also be, then it is obvious you will not be getting any professional marks as well. Let's read the scenario now. You should assume that today's date is 1st December 2026. Okay. Yacon, the managing director of Yacon, has requested advice on the tax implication of Yacon Limited setting up a tax advantaged share incentive scheme for its employees. The capital gain tax relief available on the sale of house and potential inheritance tax liability arising on the gift of an apartment. I always say one thing, even I said in previous classes also. If you read it again, then you will get to know that examiner has repeated the requirements again. It's just a copy paste of the requirements. Yacon Limited is a UK resident, unquoted trading company, which is not part of a group, okay, is considering setting up either a share option CSOP or share incentive plan, both of which would be offered to students. Comment on that, please. Which scheme can easily support this one and which is going to hardly support selected employee option? Kindly answer in the chat box if you are with me. Or you are saying, no, sir, we are at our own homes. We are not with you. Okay. Kindly answer. Which scheme can easily support the selected employees point? And which one you think is a bit difficult to support this point? Let's see. Finally, answers are coming. Actually, CSOP is easily supporting this point. CSOP. SIP is generally for all the employees. Yes, in SIP we have seen one thing. You can exclude those employees their I would say employment period is right now less than 18 months in your organization. Other than that, you have to bring every employee in SIP plan. Okay. So this first point you can say selected employee is very easily acceptable under CSOP. Yacon Limited criteria for tax advantage share incentive scheme. Employee will be selected to join the scheme dependent on their period of employment with the company. Wow. Now listen to me carefully, students. This point, you can say that on this basis. Of course, in CSOP, you can choose any employee you want to choose, no issue at all. But this point can support your SIP. You can exclude all those employees, their employment period right now is not exceeding 18 months. Okay, what else? If the scheme is CSOP, each employee will be offered option to purchase shares worth up to 3,000 each year. Students, worth up to 3,000 each year. Under CSOP, if you recall, the maximum value per is how much? Maximum value per year is 60,000 pound if I'm not wrong. Here we are giving CSOP scheme and it is just 3,000 pound each year, well above within the range. So can I say providing the value of CSOP which is less than 60,000, that is perfectly acceptable, no issue at all. Kindly reply yes or no. Student, please, I'm waiting. Okay. Employees will exercise the options. Look at this. After how many years? If you recall, CSOP says you can exercise your share options within 3 to 10. So can I say if you are exercising your share options after 5 years, so scheme remains approved, no issue at all. Only the problem could arise if you are exercising before 3 years. So can I say exercising after 5 year means logically there will be no income tax implications. Of course, on disposal the CGT will arise, but there will be no there will be no income tax implications the day you will be exercising the share options. Is that clear to everyone, student? So you can say that on grant date, of course, no tax, and even you will say no tax on exercise date. Why there's no tax on exercise date? Then you explain to your examiner that under CSOP exercise period should be between 3 to 10 years. Here it is going to be 5, so it is within the relevant range of the exercise period. So that is why no tax implication on exercise date. I hope till here everything is clear. After that, now let's talk about if SIP scheme If the scheme is a SIP, each employee will be given free shares worth 3,000. So first of all, look at this 3,006. First thing you can always mention in the question that all those employees their employment period is not exceeding 18 months. You can exclude them. Second, under SIP, you can provide tax-free shares to each employee, each tax year, the value is 3,600, which means that providing free shares up to 3,000 pound is again well within the range of SIP free share options, which are 3,600. Okay. Employees will remove the shares from the plan after 5 years. If they will be removing shares after 5 years, so again you will say there will be no income tax implications. After 5 years, there is no issue at all. So students, how to actually answer this question? I'm just writing an answer plan for you, nothing else. But properly, student, you need to properly answer it. The answer plan is for CSOP. Selected employees condition is perfect. CSOP says per tax year. On grant date, the share options which you are providing to your employees, they should be having value maximum 60,000 pound, which means here company is providing 3,000 pounds. So this value is again within the range, 100% acceptable. Then exercise period should be between 3 to 10. Here the company says after 5 years, which is after 5 years, it means no tax implications. You can say no income tax implications. Take it like that. No income tax issues on exercise date. So student, when you will be answering part A of this question, so relating to CSOP, you have to at least consider these points in your answer. Now let's talk about SIP. In SIP, students, first of all, you need to mention it has to be for all employees. You cannot say I'll give this to selected employees. Only one thing, those employees they are having employment period in your company less than 18 months, they can be excluded. Normally SIP is for all employees, not for selected employees. Only there's one option, and that option is you can exclude those employees their employment period in your company is actually less than 18 months. Third point is free shares up to question. Yeah, it is optional. It is optional. It's not compulsory. If you want to bring them, it's up to you. You can bring them. If you want that point on the point of 18 months minimum period of employment, if you want to exclude someone, you can exclude. HMRC will not raise any objection. Okay, so it's optional. It's up to you. Either you are using it or you are not using it. Okay. Free shares up to 3,600 per tax year per employee. Here the value is 3,000, again within the range, no problem at all. Then one more point. No income tax liability. Why? Because SIP you will be getting exercised after 5 years, if I'm not wrong. So after 5 years, there's no issue at all. So student, this is what at least your answer should cover these points. Of course, this is not the exact answer. I'm just giving you the answer plan. This answer plan will definitely help you when you will be sitting at home with a time and formulating your answer. One more thing, student, which I mentioned earlier also in my different classes, kindly, whenever you read the examiner answers, by looking at the volume of your examiner's answers and the quality which examiner produces, do not get demotivated because you are making a mistake. The mistake is you are comparing yourself with the examiner. How can you compare yourself with the examiner? You are a student and he's your examiner. So actually, it's not a right comparison. So what should be done? Let me tell you. In ATX, if you are able to recall the relevant rule at relevant place and your application is correct, no matter when you are applying, you have highlighted in your examiner has highlighted 10 points, you have highlighted 4 to 5 points, still okay. As far as you are correct, your answer is correct, no matter the volume is very less, you will still get really good marks. But if you start producing unnecessarily a great volume but with no head and no tail, so you will not be getting marks. It's not the exam of who can type so much. It's not the case. So you will be getting answer for the correct things which you have mentioned. And it is always advisable, even for part A, B, and any part, before attempting starting the answer, it is always advisable at least spend 1 minute on making an answer plan. Okay, I'll be discussing this, and then start writing it. The 1 minute which you'll be spending on that answer plan, to be very honest, that will, number one, give a proper structure to your answer. Plus, it will actually save your time. Sometimes students, they think if we spend around 1 minute or maybe 30 seconds on an answer plan, so that will create a time pressure. It will not create a time pressure. It will actually save your time. It's if you are making an answer plan before writing your answer, it is like that if you want to go to XYZ place and before that place you are doing a little bit homework, and that homework will actually save your time. So I strongly believe part A is 100% clear to everyone. Kindly reply, students, before we move to the next part. I'm saying it is clear 100%, not less than that. I'm not getting any answer, so percentage is less than 100. Finally, one answer. Thank you. Go back to part B. Part B, 7 marks. Calculate with brief explanation. Let's see. Calculate. Yacon was gifted an apartment by his aunt Jekma on 5th June 2024. Has never lived in this apartment, will sell the house he currently lives in and move into this apartment on December 26. Okay. Sale of his current house, Yacon. Yacon purchased this house on 1st July 2018. When he was employed overseas. Student, we have revised before doing this. You are in overseas, you are buying a house in UK, okay? So initial time period when you were not in UK, that can never be a part of democcupation, because now here Preceded and followed criteria can never be met because when you bought that house, you were not in UK. Okay. And here you cannot say that point also, that my employer did not allow me to go back. At least it has to be preceded and then followed. Okay. But here it cannot be met. It can never be preceded. Yacon did not own any other property between 1st July 18 and this date. Okay. The sale of the house on December 26 will give a rise to a directly examiner has given us a chargeable gain before any relief. Okay. Yacon occupation of his current house. Yacon moved into a house on 1st January 2026. Now stop. From 1st July 2018 till 1st January 2019. The time period is exactly 6 months, if I'm not wrong. This 6 months, they are chargeable months, chargeable time period. They cannot be exempt months. They cannot be a part of your occupation period because there is no prior occupation. Okay, they cannot fall in deem occupation. Yacon has occupied the house since 1st January 2019. Apart from the period from 1st July 2020 to December 21, when he was once again employed overseas. Now, if you were living in the accommodation, then you move abroad for working, now you'll be thinking for deem occupation. Yacon resume exclusive occupation of house on January 2022. So while working abroad, any time period spent while working abroad, now we'll go for deem occupation period. That is a deem occupation. Deem occupation starts from 1st July 2020 till December 2021. Okay. Then he reoccupies the house on this date. Since 1st April 22, Yacon has let the basement of the house, which comprises 25% of the property for residential use, retaining how much? 75% for himself. Now, student, let's go for part B of the question. For private residence relief, we need to calculate the months of deem occupation and actual occupation, of course. So, private residence relief. I'm taking exempt months, chargeable months. First 6 months are chargeable because no prior occupation. 1st July 2018 till January 19, if I'm not wrong, to you can say December 2018, it's the same thing. How many months? 6 months. And for explanation, only a single word, absent, but no prior occupation. No prior occupation. Now let's go back to the question. When he reoccupies, when he first time occupies the house, January 19. From January 19 till July 2020, January 19 till this, July 20 means entire year of 19 and 6 months of 20, which means 18 months. Can I say 18 months is the actual occupation? It's not the deem. 1st January 2019 to 30th June 2020. 18 months. Actual occupation. Then I think on 1st July he goes abroad. He went abroad on 1st July 2020 to how long? Let's see. Just a minute. 1st July 2020 to December 21. So it means 6 months of 2020, an entire year of 21. Can I say again 18 months? But that falls in deem occupation. 1st July 2020 to December 2021, 18 months. And this is absent, but it is considered in deem occupation. Absent, but deem occupation. As employed overseas. Wow. Now let's go back. Now when he comes back to home, January 22. From January 22 till April 2022, he was living in the entire occupation or entire accommodation. Apologies. Okay, it means 3 months. 1st January 2022 to 31st March 2022, 3 months. Occupied. Just a minute. Now what happened? He has given his accommodation on rent. Now this is the interesting part. From 1st April 2022 onwards, Yacon has let the basement of the house, which comprises 25% of the property, for residential use, retaining exclusive occupation remaining 75%. Okay. If we count the time period from 1st April when he sold the property, disposal date. Will sell the house he currently lives in and move to his apartment on December 2026. Now listen, Ashwin, carefully. From here till December 2026. In this entire period, accommodation was on rent, first point. Second point, last 9 months of the ownerships are always treated as occupation months. Last 9 months of the ownership, they are always considered as occupation months. So last 9 months of ownership. From 1st April 2026 till December 26. They are always considered as occupation months. So which means that if you count the time period from 1st April 22 till December 2026, the total time period is actually 23, 24, 25, 26. The total time period is 4 years and 9 months. Even though the accommodation was on rent for 4 years and 9 months, but the rule says last 9 months of the ownership, they are always considered as occupation months. So out of 4 years and 9 months, last 9 months we have taken in occupation months. So actually we are left with only 4 years. 4 years means 48 months. Now these 48 months will be split between occupied period and the period we have given the property on, I would say, a rent. 25% of the property was on rent, 75% was retained. Let me use the calculator. If I take 25% of 48, I'm getting 12. So logically, the letting period is only 12 months. Let me repeat. Student, from 1st April 2022 till December 2026, the total time period of, you can say, when the one portion of the accommodation was on rent, another portion was retained by the Yacon. The total time period is 4 years and 9 months. I'm not multiplying that percentage 25 and 75 on 4 years and 9 months, because the rule says last 9 months of the ownership, they are always considered as occupation months. So first you have to exclude those occupation months, then you will be actually left with 4 years. 4 years means 48 months. So the percentage will apply on these 48 months. Out of that 48, 75% is occupied, 25% on rent. So which means that from 1st April 2022 to 31st March 2026, it is occupied. Total time period is 48 months, but I'll take 75% of that, which is 36. So it means 12 months are chargeable months. And the last 9 months of the ownership are always treated as occupation months. So last 9 months treated as 100% occupation. As he was living 100% in that property in the last 9 months. So let's use the calculator. It's here. 18 plus 18 plus 3 plus 36 plus 9. Students, I'm having 84. And here we are having 18 months. So here comes principal residence relief. Chargeable amount they have given us, if I'm not, or capital gain they have given us on the disposal of the property. It's 1,45,000. Let's see, the principal residence relief amount is 1,45,000. 84 divided by 84 plus 18. Simply I'll add both of them. So the ownership period is 102. So 1,45,000 multiplied by 84 divided by 102. Students, I'm getting 1,19,411.76. So make it 2. 412. So this much capital gain is actually exempt. Now we'll think for the letting relief. Simply letting relief is the lowest of one, you can say PRR amount. Second, 40,000 pound. Third, the gain attributable to letting period. Attributable to letting period. The capital gain is 1,45,000 And how many months they are attributable? Only 12. Okay. Divided by 102. Calculator. 1,45,000 multiplied by 12 divided by 102. Students, I'm getting 17,058.8. So make it 17,059. So this is student part B. Now let me tell you one thing. Some of the student unnecessarily they calculate something while solving this question, which is not required. Number one, you're not getting any marks. In fact, you are wasting your time. And that is after getting these relief, some of the student, what do? From the total gain, they deduct these reliefs, and then whatever comes, then they say, okay, now let us deduct annual exempt amount. Let us calculate CGT, and they also start writing that when there is a capital gain, when there is a CGT on residential properties, you have to pay CGT within 60 days. So now whatever you are doing, okay, you are showing your knowledge, but that is not required. That is not required. If someone is mentioning here, when do we pay CGT on residential capital gain? It will, you will not earn any marks because examiner did not ask this. Examiner also did not ask you to calculate a taxable gain. So knowing something does not mean that you have to tell each and everything to your examiner. You have to restrict yourself to the extent what exactly question is asking. Please just write that. Other than that, whatever you are writing, you are getting no marks. Let's go to the last part of the question. It's a 5 marks. Okay. Explain the inheritance tax implication means consequences of Jack Ma's gift of the apartment to Yacon on 5th June 2024. So when you will be answering, so you have to specify the date. On this date, what should happen? What should be the tax implication if Jack Ma were to die on this date? Let's see. Jack Ma. Is shared. Gift of apartment by Jack Ma. When Jack Ma gifted the apartment to Yacon on 5th June 2024, it was on a condition. Before going for the condition, first thing, student, which you should explain to your examiner, and that is simply gift from one individual to another individual is pat. So you will be just telling your examiner gift of this apartment on 5th June 2024. Simply it is a pat. After that, you will change the things. It was on condition of her continuing living in the property for the foreseeable future. Now you will say it is actually a gift with reservation. Now you have to explain your examiner why it is gift with reservation, because after Jack Ma gives the gift, Jack Ma still continues living in that accommodation. That actually shows it is gift with reservation. Okay. On 12 March 2026, Jack Ma began living with her sister and she removed the condition. Now listen, when she removed the condition means reservation was uplifted. Now listen to me carefully. When the reservation was lifted, when the reservation of the benefit was lifted, no more reservation, then logically on 12 March 2026, you will explain to your examiner it actually creates a further pat. Acid is same, but there's second time there's a pat. Repeat. The day this reservation was lifted, on that day, which is 12 March 2026, actually it creates a further pat. And this further pat value would be the market value of the apartment on that date. On that date means this date. Market value of apartment on 12 March 26, and initially apartment is same, market value on 5th June 2024. Okay. Now the question says, if Jack Ma were to die on 2029, now listen to me carefully, students. First of all, if Jack Ma dies on December 2029, okay, this date, even you, one concept don't forget, if donor survives after PAT for at least 7 years, then PAT becomes fully exempt. If donor dies within 7 years, then of course PAT becomes chargeable. Now here, even you count the date from 5th June to 2020, 5th June 2024 to December 29. It is logically both the dates. If Jack Ma were to die on December 2029, can I say this is within 7 years from both the dates? Both the date means original date when the PAT was initially the asset was given with reservation, or second when the reservation was uplifted. But now listen to me carefully. There is another rule which says that if donor dies at least after 3 years of PAT, simply donor survives at least 3 years, then on death tax, donee will be getting a taper relief. And taper relief actually reduces IST. Now listen to me carefully. If HMRC considers the gift date as 5th June 2024, logically considering a 5th June 2024 as a PAT date, it will end in a lower IST liability. Why it will end in a lower IST liability? Because there will be a higher taper relief. But if we consider the second date, 12 March 2026, as the death date, okay, then of course the scenario of the taper relief is going to be different. But the question is the same. There's one asset and we're considering this two times. The answer is then of course to avoid double tax, only one PAT will be considered by HMRC. On that PAT will be considered, which will actually result in higher IST, and that is going to be, I believe, 12th March 2026. So let me repeat each and everything for you again. The first thing is from which you have to explain to your examiner regarding part C, answer plan. First, you have to just tell your examiner the concept of PAT. Then you will be mentioning that PAT value will be market value of apartment. I think it was on apartment market value on 5th June 2024. Then further PAT came on 12th March 2026 when the condition was removed. No more gift with reservation. Then next point, death date 31st December 2029. It is within 7 years. Within 7 years means PAT becomes chargeable. But then we'll talk on death tax. Taper relief is available if donor survives at least 3 years. Okay. Then we'll say that to avoid double IST on PAT, because why double IST is coming? Because asset is the same, but actually their PAT is creating two times. So to avoid double IST on the same asset, HMRC considered the PAT on any one of the dates, and practically they will consider the date or date of a PAT, which actually results in higher IST liability. And normally you will say it will be the 12th March 2026, because normally it is assumed that property value will be higher on the date 12 March 2026 as compared to 5th June 2024. So I hope the discussion of part C is also clear to everyone. Kindly reply, students. Let me save this and then I'll share the new question with you. Okay, student, this question we have already done, but I think I did not ask admin to upload. But don't worry, we'll look into that. What I want to discuss right now, I just want to discuss the areas which are examined in this question. First of all, let's talk about enterprise management incentive plan. Try to understand one thing. Assuming, I'm just assuming, let me bring the data. On grant date, let's say the market value of the share is £5. But if your company offers the exercise price, let's take it £4. So logically on grant date, you are providing a discount. In case of enterprise management incentive plan, if we provide a discount on grant date, one, it does not make the entire enterprise management scheme to become unapproved. It does not make that the entire scheme to become unapproved. Only the problem arises relating to the discount. Now, assuming number of options, they are, let's say, 20,000. Obviously, on grant date, there is no tax. On exercise date, but looking at the data which I have written, you will say on exercise date, there is going to be employment benefit, or you can say taxable benefit. And on this employment benefit, you will be paying income tax. And don't forget, if the shares are from a quoted company, then there will be class 1 employee and employer NIC. If the shares they are unquoted, there will be class 1A NIC. But that's for sure on exercise date, taxable benefit will arise on which we will be paying income tax. Logically, your employment benefit, taxable benefit is going to be equal to the discount. And that discount on grant date. No matter whatever is the value, market value on exercise date, that market value is irrelevant for us. Let me put more data. Market value on exercise date. Let's say your examiner says market value on exercise date is £6. This £6 is irrelevant for me. The day of exercise comes, so I'll put exercise date heading. Now what I'm doing, look at this. I'm writing market value on grant date. In my question, it is £5. Exercise price, I'm getting 4. So there's a discount of £1. Number of options, 20,000. So it means 20,000 becomes taxable benefit. This 20,000 actually becomes a taxable benefit. Okay, what else? Now listen. If there is any other than exercise price, if there is any option cost, so I will consider that option cost as well, but I'm not considering right now. Obviously, when I'm going to sell these shares later on, when I'll be selling these shares later on disposal of these shares, I will consider the option cost at that time. Okay, now let's say disposal date. Assuming on disposal date the market value is £8. Now this is important. Assuming market value on disposal date is £8. Now look at this. Disposal proceed. You will take 20,000 into £8. I believe I'll get 1,60,000 if I'm not wrong. I will deduct exercise price, which is 20,000 into 4, I'll get 80,000. But story does not stop here. I will deduct the discount as well. Repeat. We will deduct the discount as well, because on that discount amount we have already given the tax. Is that clear to everyone, students? On that discount amount we have already paid the tax. So I will consider the discount as well. So we will be considering that discount also. So discount is 20,000. Logically, the chargeable gain will be, in my example, it will be 1 lakh. If annual exempt amount is available, means not utilized in the current tax year, taxable gain will be, I'll explain. No issue. Give me just a moment. Taxable gain is 95,000. Okay, now another very important point is, when you will be applying CGT rates, if the ownership period is 2 years, then badder will be available. When the badder is available, applicable rate will be 14%. And ownership period in case of enterprise management incentive plan starts from the grant date. Normally, it does not start from the grant date. Logically, it should start from the exercise date. But HMRC says no, in case of enterprise management incentive plan, you just need to meet one condition, and that one condition is ownership period has to be 2 years. If the ownership period is 2 years, then you will be getting badder. And wherever badder is applicable, applicable CGT rate is going to be 14%. Now the question is, let's repetition of the discount. Let me explain that again. Come here. On grant date, market value of my company's each share is £5. Okay. But we decided the exercise price £4. So student, how much discount we are providing? Logically, we are providing a discount of £1. Main rule is, more than, I would say, the main rule is, on that discount, you will not be paying any tax on grant date. That discount amount becomes a taxable benefit on exercise date. First of all, student, the discount is clear to everyone. Which discount we are talking about? Before I move to another issue, kindly reply. The discount thing is clear, yes or no? Thank you. So on grant date, there is no tax, but on exercise date, yes, discount becomes the taxable benefit. So on exercise date, whatever is the market value on exercise date, I'm not considering that. Even though categorically, clearly the examiner has mentioned, let's say, exercise price is £6. I'm not working on that £6. I'm taking the market value on grant date, deducting the exercise price, getting a discount as my taxable benefit. Then I'll be paying income tax, I've discussed. Then, but next point is on disposal date. From the disposal proceed, I'm not deducting only exercise price, I'm deducting discount as well. Logically, that try to understand. If you don't deduct the discount, what happens? Can I say your chargeable gain will increase? Now try to understand that if the chargeable gain increases, I'll be paying CGT on 120. Don't you think so? Out of that 120, 20,000 on 20,000, I've already paid the tax. Why would I pay the tax twice? That is why HMRC says, okay, if there was any discount on EMI scheme on exercise date, discount becomes your taxable benefit, but that discount will be deducted while calculating capital gain. I hope now the entire treatment is clear regarding EMI. If it is given on discount, kindly reply before we move to the next point. Thank you. So one, in this question, you will see enterprise management incentive plan regarding this discount and everything. And second, I have said BADR, where BADR is applicable, CGT rate will be 14%, but ownership period must be 2 years. There's no need to have 5% holding. Otherwise, normally BADR is available when it is a personal trading company. Personal trading company means you have to have at least 5%, I would say, holding. And you should be an employee, part-time or full-time. Of course, here you are an employee. When you are getting enterprise management incentive plan, it means you are an employee of this company. But HMRC says in case of EMI, it is not necessary to have at least 5% holding. Even your holding is less than 5%. In fact, make it easier. 5% condition does not apply on EMI. If you are selling EMI shares and your ownership period is 2 years, you will get BADR. And ownership period is counted from the day EMI is granted. Okay, now. And we know BADR limit is 1 million for the entire life. Now, next concept which was examined in this question, I think that is, I consider that more important than this one. What is that? For example, I'm just giving you a data, okay? Just other that 100% fits on this example, but I'm just giving you a data. Assuming, let's take it, Mr. A. Mr. A started the business. 1/1/2026, okay? We are having a tax adjusted trading loss. The loss I'm taking is, let's say, make it easier, let's say 36,000. Then assuming 1/1/2027 till December 27, we are having a tax adjusted trading profit and I'm taking 24,000. Requirement is calculate tax adjusted trading loss / profit for relevant tax years. Because why examiner is asking this question? You look at the year end. Year end is not 31st March. That is why this question is being asked. If the year end was 31st March, then things become extremely easy. Here the year end is not 31st March. That is why examiner is asking you to give me the amount which falls in different tax years. Before attempting this question, student, first you should know one thing: when the tax year starts and when it ends. Tax year starts from 6 April of any year, then it goes to the end and ends on next following 5th April. Now come here. First, look at this one. Business started on this date. Means before that there wasn't any business. Look at this. 1 1 2026. From here I'll go to 5th April 2026, and logically this date falls in the tax year 25-26. And how many months? 3 months. 12 months loss is 36,000. Just a minute. Twelve months loss is 36, but entire 36 does not fall in a single tax year. If I do 3 by 12, I think I'll get 12,000 if I'm not, or 6,000, or maybe 12 or 9,000. I'm getting 9,000. Logically, the loss of 9,000 falls in the tax year 25-26. Okay. Now, the next tax year is start. Now, some of the students, they might be thinking, sir, why you did not start it from 6 April 2025? Students, look at the data. Mr. A started the business on 1st January 2026. He did not started the business on 6 April 2025. So obviously I'll be starting my working of finding that relevant tax year the day the business was started. From that day onwards. Now, after this 25-26, the next tax year comes 6 April 2026. I'll go from here till 5th April 2027. The tax year is going to be 2026-27. It's exactly the 12 months period. But from where I'm going to get these 12 months, now try to understand. 9 months I will take it from here and 3 months from here. Is that clear to everyone, students? Tax year 2026-27, 9 months we'll take from the first accounting period and 3 months we'll take from the second accounting period, which means that in the first accounting period, we are having a loss of 36,000. I'll do 9 by 12 plus, then I'm having a profit of 24,000. I'll do 3 by 12. There will be a loss, profit, and obviously I'm going to net off them. So 36, 9 by 12 will give us a loss of 27,000, but I'm having a profit of 6. So profit of 6,000, loss of 27. So can I say the final net loss will be 21? Kindly check this working, student. Is that clear to everyone? What falls in the tax year 26-27 according to the data which we are dealing? Kindly reply. Clear. Thank you. Then after 2026-27, the next tax year is 2027-28. This starts from 6 April 2027, goes to the end of 5th April 2028. Of course, it's a 12 months period, but do I have a data of 12 months? From the second accounting period, I'll take only 9 months because first 3 months we have already utilized. And next 3 months, January 28, Feb 28, March 28, we don't have it. So the data which is available to me, obviously I'll be working on that data. So I'll simply communicate with my examiner that out of 24,000, only 9 months are relevant for us because first 3 months we have already utilized and the remaining 3 months we don't have. 18,000. Now the question is when do we need to perform working like this? The answer is whenever a business starts and does not have the accounting end 31st March. This problem only arises whenever a new business starts and accounting period is not ending on 31st March, then you have to perform this working. Then you have to perform the working that how much, let's say, taxable loss or trading profit falls in different tax years. Is that clear, student? When do we need to perform such working? Kindly answer. Kindly reply, is that clear? When do we need to perform such workings? Thank you. Now, one more thing which I want to tell you about a partnership. Assuming your examiner says in a partnership there is a loss of 60,000. Assuming partnership is having a loss of 60,000. Okay, fine. Actually, what happens when partnership makes a profit, that profit we distribute between the partners. There's a possibility partnership is having a loss. If the partnership is having a loss, then we will be distributing loss to the different partners. You just need to know one thing, one concept. What is that? Let me first do it in a different way. Let's take it this 60,000 is a profit. Assuming partnership has generated a profit of 60,000. It is a tax adjusted trading profit of the partnership. Let's take their let's assume there are three partners A, B, and C. There's a column of total as well. But don't forget, tax adjusted trading profit of the partnership is 60,000. Okay. And let's say annual salary of Mr. A, I'm just having the writing the values. Annual salary of Mr. A is 10,000, B is 10,000, C does not charge any salary. Okay, fine. So total salary is 20. Now try to understand. The profit value of the partnership is 60. Out of that profit, if I'm giving 10,000 to Mr. A as salary, I'm giving 10,000 to Mr. B as salary. Logically, now the profit which I have for distribution, which is a balancing figure, and this will be 40,000. It will not be 60. The question is why it is not 60. Try to understand. The entire partnership has generated 60, and while calculating that 60,000, we are not supposed to deduct salaries of the partners because salaries of the partner deduct. It's not allowed. You cannot deduct salary of a partner. Deducting a salary of a partner means you are deducting a salary of the owner. Owners, they get profit, they don't get salaries. So owner salary, partner salary is not deductible. So while calculating 60,000 tax adjusted trading profit, we did not deduct the I would say salaries of the partners. Okay, fine. So we have given 10,000 to Mr. A, annual salary 10 to B. So 20,000 goes to the salaries. We are left with out of 60, the profit is 40. And this 40, let's say we'll be giving 40% to Mr. A, 40 to B, and let's say C will get 20%. I'm just assuming these ratios 40, 40, and 20, which means 16,000, 16, and 8,000. So total goes to Mr. A salary plus the amount of profit 26, 26. Just try to understand one thing. Partnership profit is 60. When we started distributing, first we have given salaries because it was written in the agreement, for example, that A and B will get the salary of 10 each. C does not get any salary. It was written in the agreement. So payment of salaries to the partners, they have actually reduced the profit available for, I would say, sharing between the partners. Salaries given to the partners is actually reduces the profit which I'll be distributing among the partners. Now, look at this. Assuming scenario B, this time partnership is having a loss of 60,000. Everything is same, but this time is instead of profit, we are having a loss. According to the agreement, first we will be giving salaries 10,000. C does not get any salary. Now listen to me carefully, students. There's already a loss of 20,000. There's already a loss of 20 or 60,000, my bad. There's already a loss of 60,000. When I'll be actually allocating that loss between the partners, and there's a arrangement for the salaries as well. Now listen, salaries to the partners will increase this loss. Salaries to the partners will increase this loss, which means that I'm just writing a balancing figure. Now try to understand. I need to have a final answer here, 60 negative loss. But balancing figure, this 20,000 salary, instead of reducing, it will actually increase the loss. Now the loss which I'll be allocating to these three partners, it will not be 60. Logically, it will be 80. So I'll take 40% of this 80,000, which is 32. 32 and 20% is 16,000. So 22 loss actually goes to, net loss goes to A, B, and here comes the C. I just wanted to clear one thing. When there is a profit in the partnership and we are giving salaries to the partners, these salaries actually reduces the profit which we'll be distributing among the partners. You can see that. But come here, if there is already a loss in the partnership and I need to give salaries to the partners, then salaries to the partner will actually increase the loss which we will be distributing to allocating to the partners, which will be allocating to the partners. I hope that concept, that rule is clear to everyone. Kindly reply. Okay. Now, the final area which was tested in this question, and I'm again, I've repeated many times earlier also. We have already conducted a class on this question rod. There's already a video lecture on this question rod, but I did not upload it. I did not ask admin to upload purposely. Now this is the right time because we have covered the capital gain as well. Now it is the right time to upload the video lecture on road. So it will be uploaded today on the portal. Don't worry at all. The next point is very important. That will actually save your time in exam. How it will save your time, I'll tell you. For example, the tax year is 24-25. Okay. We are having our tax adjusted trading loss 50,000. Let's say employment income of Mr. A is make it 60. Property income, let's take it 30. Okay, fine. What else? Let me take one more value. Let's say, let's increase the amount. I'll tell you why I'm increasing the amount. Let's assume the property income. This individual is having property income 70,000. Okay, fine. Let's say your examiner is asking, let me change the text here, otherwise some of the student will mind why you have written this text here. It does not make any difference. I just want to clear one thing. Now examiner is asking you to utilize this loss. Let's say it's a very simple question. I just want to clear one thing. Examiner is asking you to calculate, to utilize this 50,000 loss against the total income of current tax year. We know that due to the restriction, whenever I'm utilizing a loss against the total income, the restriction says you can maximum deduct, maximum utilize the greater of 50,000 pound, and the second is 25% of adjusted net income. So obviously here your adjusted net income will be 1 lakh 30. 60 plus 70 becomes 130. If you take 25% of 130, it will be lower than 50,000, which means you can use entire 50. Okay, students, here I just wanted to discuss one, I would say, shortcut with you, how to deal with the losses in a, I would say, in a short time of span, how to deal with the losses question. Assuming tax year is 25-26, there is a loss of 50,000 pound. Okay, employment income is 60 and property income is 70,000. Okay, an examiner is categorically asking us to utilize the trading loss against the total income. Okay, fine. Normally, how do we solve? The one way of solving is first calculate income tax liability without the loss relief. If we calculate income tax liability without the loss relief, so here the total, just to save the time, I've just written directly 130. Personal allowance will be 0. Why personal allowance will be 0? Because let me tell you, the taxable income is 130. Students, if you recall, whoever is having adjusted net income, whoever is having adjusted net income equal to greater than 1,25,140, that makes personal allowance, then personal allowance actually becomes 0. So this individual is not getting personal allowance, and this individual is logically is an additional rate taxpayer. So 37,700 into 20% gives us 7540. Higher rate band is 125140. Out of that, 37,700 we have utilized. So just a minute. 1,25,140 minus 37,700. I'm getting 87,440. So 87,440. Let's take 40% of this. 40% of this is 34,976. So 1 lakh 30 minus 1250, difference will fall in an additional rate band. 1 lakh 30,000 minus 125140. 4860 actually falls in an additional rate band. And I'm getting 2187. Here comes the income tax liability without the loss relief, 34,976. So let's add all of them to get income tax liability. 7540 plus 34976 plus 2187. Students, I'm getting 44,703. Now, what we did, we have calculated income tax liability without a loss relief. Now, recalculate income tax liability with loss relief. And difference is going to be income tax saving. So let's recalculate 25, 26. Now we are recalculating income tax liability with the loss relief. Just to save the time, I'm directly writing the net income is, in fact, the total income is 130. Total income, I just want to discuss one shortcut. In fact, I want to show you that shortcut. Total income is 1 lakh 30, and we'll deduct the loss. Current year loss relief is 50,000. That gives us the net income 80. Now, of course, this individual will get the entire personal allowance, which is 12,570. So 80,000 minus 12,570. Taxable income, students, I'm getting 67,430. Of course, by looking at 67,430, this individual is now a higher rate taxpayer. 37,700 will take 20% of this. 7540. 67,430 minus 37,700, difference I'm getting 29,730. 40% of this actually falls in, 40% of this is 11,892. Here comes the income tax liability with the loss relief. I'm getting 19,432. So how will you calculate the income tax saving? Difference of both the liabilities. Income tax savings. Let's see income tax saving. 44,703 minus 19,432. The difference is 25,271. So how did we calculate this income tax liability? Simply it is this difference of two liabilities. One is income tax liability without a loss relief. The second is income tax liability with the loss relief. Difference gives us the income tax saving of 25,271. This student could be calculated directly as well. Now, instead of doing all these efforts that first you are calculating income tax liability without a loss relief, then you are recalculating, I would say, income tax liability with the loss relief, and then differences you're saving, this you could have done directly. If I show you this, how to do it directly, the loss amount is 50,000. Into 40%, the saving is 20,000. Now, listen, I'm just calculating directly how to calculate directly the saving amount. The loss is 50 into 40% will give us the tax saving 20,000. Second, of course, due to utilizing the loss of 50,000, now this individual will get the personal allowance. Of course, without the loss relief, he does not get the personal allowance. With the loss relief, he gets personal allowance. So personal allowance will actually also save his tax. The amount of the personal allowance is 12,570, but logically the entire availability of entire personal allowance is not going to save 40% income tax. One portion of personal allowance will actually save additional rate also. How much personal allowance will actually save, I would say, additional rate? Out of 12,570, 486 into 45%, that actually saves your additional rate band income tax, and the remaining 7710 into 40% saves your higher rate tax. So we are getting 5271. So 20,000 plus 5271, here comes your directly the income tax saving, which is 25,271. The first question is, so why you have directly multiplied 50,000 with 40? Why not 45? Student, at least you need to know one thing. Look at this individual total income without a loss relief is 130. Without a loss relief is 130 means how much amount actually falls in additional rate band. If I take the difference of these two, 125, 140, only 4860 actually falls in additional rate band. So only 4860 is the amount which is going to save 45%. After that, all availability of personal allowance and of course losses, they will be saving 40%. Next question is why it is not saving 20% basic rate band. Actually, the amount of your taxable income in both the cases, without the personal allowance and with the personal allowance, in both the cases, you have got enough taxable income which is good enough to utilize the basic rate band. So I just wanted to show you one shortcut. So you can see that by using this shortcut, we can directly calculate the income tax saving which we have calculated here. Now let me prove this with another example. And this I've already done it to save the time. Assuming the tax year is 25-26, the loss, tax adjusted loss is 40,000. Employment income this time it is 70, property income is 50. Again, first I'll be calculating income tax liability without a loss relief. 120 minus the personal allowance. So of course, this individual will not get the entire personal allowance, 12,570. Why? Because his adjusted net income is more than 1 lakh. Whoever is having adjusted net income more than 1 lakh, personal allowance will reduce. So what I did, 12,570 less 120 minus 1 lakh into 1 upon 2, personal allowance reduced by 10,000. So this individual without a loss relief is getting a personal allowance of 2570. So 1,20,000 minus 2570, taxable income is 1,17,430. Then I have simply applied the income tax rate, basic rate band into 20%. Then this 37,700 is deducted from the total taxable income. I'm getting a amount of 79,730 which falls in higher rate band into 40%. So I'm getting income tax liability 39,432. It is actually 39,432. This income tax liability is without a loss relief. Now, if we recalculate the income tax liability with the loss relief, let's see what happens. Total income is 120 minus the personal allowance. I'm getting net income 80 minus personal allowance. I'm getting a taxable income 67,430. So on basic rate band 20%, this falls in higher rate band. So here comes the income tax liability with the loss relief, which is 19,432. Difference of two income tax liabilities, the liability without loss relief is 39,432 and the liability with the loss relief is 19,432. Difference the saving is 20,000. But of course, it is, I would say, a long method. While sitting in examination hall, we don't have that much time that first we are solving the question without a loss relief, and then we are recalculating income tax liability with the loss relief, and then you are showing the difference is the saving. Let us calculate the entire 20,000 saving directly. I'm taking a loss. Let's take the loss. This individual is not an additional rate taxpayer without a loss relief. We have seen that. So 40,000 into 40%, the saving is 16,000. Next, without a loss relief, this individual was getting a personal allowance of 2570. Now, student, due to this 40,000 loss relief, this individual will get the entire personal allowance. Getting the entire personal allowance means this individual will get additional personal allowance of 10,000. Why I'm saying additional personal allowance of 10,000? Because without a loss relief, he was getting a personal allowance of 2570. With the loss relief, he will be getting the entire personal allowance 2570. So how much additional personal allowance is going to get? 10,000. So 10,000 to 40%, the saving is 4. Here comes the directly tax saving of 20,000, which we have calculated directly. So I would say there's no need to solve it twice, that first you are solving without a loss relief, then you are solving with the loss relief, and difference is your saving. You can go for this direct method. I have proved this method in both the cases. When someone is an additional rate taxpayer, then you have seen that. If someone is a high rate taxpayer, you have seen that as well. So I would advise, especially in ATX, even you can go for in taxation, a student can do that also, but at least in ATX, I would advise try to go for this shortcut. Plus one more thing, students, in the coming live revision classes, we will be discussing the remaining question. In today's class, the agenda was to discuss the 4 Kaplan kit question, but we have discussed 1 out of 4. 1 we have already discussed. So 1 we have done today. The remaining 2 questions we are going to discuss before the Saturday class. And then on Saturday class, I'll discuss the agenda. And after the coming Saturday, the target would be to solve in my live revision classes at least 5 to 6 Kaplan kit questions on a weekly basis, so that you can have the opportunity to attend these live revision classes in which we'll be discussing the questions from the latest Kaplan kit. And you might have noticed in today's class, we did not directly discuss the question. First, I have discussed the relevant, I've just given you a quick revision of the relevant areas, and then we discuss the entire questions. So that is all about today's class. Thank you very much for those students they attended today's class. I hope to see you and others in the next class. Thank you very much, and do give the feedback about today's class in your relevant WhatsApp groups.